thank God it's Friday, and what a Friday it is for us in Lagos, especially if you have anything to do around the Berger area, you are in for a big surprise. In fact, it's better just stay at home. Don't get on the road if you have to go outside Lagos or go around Bergen. Channels TV has been keeping you abreast. It's horrible. It's really, really bad. The truck fell off, blocked the whole road inward or outward Lagos. And of course, Nigerians being who we are, we have extended it to the other side of the road. So both sides were blocked this morning. Had to do a bit of trekking. Yeah, because even bikes couldn't pass through it. And I do not know the state of the car that was covered with the contents of that truck, but it's really a horrible one. And one will ask, what's really going on with the Kara Bridge? In fact, it was two accidents happened on the Kara Bridge. That shot how many kilometers? That from last night till this morning. And of course, response time is another conversation, because if this happened last night, one would have hoped that the agencies involved would have at least been able to clear it, even if it's a part of the road, so that some cars can go through the other parts of the road. But obviously that's not what we have seen. And so this morning, 8 a.m., you can't come out of Lagos State. You are stuck. You can't even do a bike across. You have to take to your feet if you want to get through. So not a good one, but I guess I needed the exercise. It's been a while since I did that, yeah? But anyways, let's delve into business now. We still do 55 minutes of current and relevant business conversations here in Business Morning. I'm in John Lekwa, and we start from the global oil space, where the price is headed for weekly gains. The Houthi attacks on tankers in the Red Sea, that has sparked another level of worry about the closure of a second shipping choke point. Kazakhstan temporarily cut out output after its main export route was forced to shut down. So yesterday about this time, we had seen price Brent hit about 100, almost 100. We've seen it ease a bit, though, 0.7. Oh, there you have it, 1.92% down at $98.74, and WTI has also eased 1.81% at $90.51 a barrel. And Brent settled up 7%, WTI up 6.2% on Thursday, and prices were driven, of course, by the fears of the attacks and what it's doing to oil supply. U.S. President Donald Trump has vowed to hold Iran responsible for any further attacks. I wonder who's going to hold the U.S. responsible for the attacks they are also carrying out. We should find a balance in all of this. Away from there, let's see what's happening in the market, or how the market closed yesterday. We did see that for the NGX, it was a very positive 0.98%, 247,831, and back to that 159 trillion naira level, looking close to 160 trillion naira. Good one right there. And black cement was a major driver of this sentiment yesterday, even though the activity chart is all red, but there were strong movements, and that is why we see the green color in spite of the reduction in activity. Top gainers, Guinness, Vicky's, and Accessco. Accessco is about 27 naira now. That's we've seen it struggle to 25, but now it's gone past that level, and it's now at 27. That's Access. Guinness also gained yesterday 10%, as well as Vicky's. Top losers were Mercure, FTN Cocoa, and Omatech, losing almost 10% each, which is the maximum any stock can lose in a single trading session. Top trade had First Holdco, Access Co, UFD. First Holdco will not let up the attention it is getting. One way or the other, it seems like the management of First Holdco want to keep their attention, so they were also part of the top trades yesterday. And the organized private sector of Nigeria, they've rejected a proposal by the National Pension Commission to increase mandatory pension contributions, warning that the move could increase business costs and threaten jobs. The group, which includes the Manufacturers Association of Nigeria, NECA, and NASIMA, says that the current 18% contribution rate is already adequate and should not be reviewed without proper studies and consultations with stakeholders. It also says that businesses are already struggling with high operating costs, rising interest rates, and exchange rate pressures, adding that higher pension contribution could make it harder for companies to create jobs and remain competitive. The group is therefore asking PENCOM to put the proposal on hold until all stakeholders have been consulted and the likely impact on businesses and workers have been fully assessed. And of course, here on Business Money, we'll touch on this conversation on Monday, God's grace, to get both sides of it and try to find a balance. Now, as the Institute of Chartered Secretaries and Administrators of Nigeria, ICSAN, prepares to mark its 60th anniversary, the spotlight is on the role of corporate governance in Nigeria's drive towards a $1 trillion economy. Speaking ahead of the celebration in an interview with Channels Television, ICSAN President Ms. Uto Ukwana said that attracting and sustaining the level of investment needed to achieve the target will depend on building strong governance structures across both the public and private sectors.
Now, interestingly, over the last 2 days, in partnership with the Financial Reporting Council of Nigeria, the Ministry of Finance Incorporated, the Institute of Directors Center for Corporate Governance, ICSAN partnered to do a 2-day National Corporate Governance Summit. And the core was actually on this subject. How do we accelerate Nigeria's economic growth embedding governance? And various speakers spoke about it, and it was implementing. It's not because we don't have policies. It's not because we don't have legislations and various regulations. In fact, we have quite a great number of these. However, implementation is where execution excellence is where we seem to be challenged. Why can't we implement those policies to harness the potentials? We always talk about Nigeria in terms of potentials, and it's because we are not diligent in implementing those policies. So ICSAN is at the core of highlighting this, of supporting professionals, because our professionals are right there.
Nigeria's digital payments industry is stepping up its fight against fraud, leveraging technology to make financial services safer, more reliable, and more inclusive. Well, that was the key highlight at the OPE Media Party, where the fintech company showed how innovation is helping protect tens of millions of Nigerians using digital financial services. OPE says its technology is built to solve everyday challenges while protecting customers' money, and the platform delivers a 99.9% transaction success rate, backed by resilient infrastructure with automatic failover systems that keep transactions running even when one network fails.
In a whole year of 365 or 366 days, if OPE is ever down, it is less than 1 hour in a whole year. Today, when a particular bank starts failing, before they know that their card is failing, OPE is already telling them that their card is failing. It takes round-the-clock addiction to a problem-solving mindset for that to happen.
One of the only banks that will not allow transactions that will deliver fraudulent to come in. They are insured by Nigeria Deposit Insurance Corporation up to 5 million naira. So it means where banks, the same insurance that is covered for commercial banks, it is the same insurance cover for OPay, for funds in OPay. So funds are secure, funds are insured also, so there is no fear that anyone's money is going to go anywhere.
Says that technology should do more than make payments easier. It should build trust and expand financial inclusion. The company's mission, they say, is to deliver secure, stable, and accessible solutions for everyone.
By 2025, we deliver our first year commitment. 10 MOU with 20 universities. We sponsor 460 students at that year. We not just stop there. We also have the internship. We also have the graduate programs. We hope that all the students we sponsor, when OPay we have positions and all the things, and then they will come to OPay to do the work and also grow together with OPay as well. Our timeline is that by the end of this year, majority of the state in Nigeria, we will have OPay branded branches, so we can provide all the service to the customer who prefer to walk in.
All right, that's okay there. Now, last on Tuesday, of course, we had that decision by the MPC of the CBN to hold rates again until the next meeting. We haven't really heard reaction from the CBN, so let's do that this morning with Mr. Victor Obo, the Director, Monetary Policy Department at the Central Bank of Nigeria, joins us virtually. Mr. Obo, good morning. Welcome to the program.
Good morning, and thank you for having me.
Good to have you, sir. So the decision was largely expected, so I don't think we've seen any boats rocked after that hold decision, and the considerations largely accepted by a lot of economists and analysts. But forward guidance is what we would like from the CBN, especially when we see that Iran and US talks, that has broken down, and now the Houthi attacking, they've joined it, and there's the fear of expansion. And of course we know what that means for energy prices here in Nigeria and around the world. So what's the forward guidance from the CBN following all that's happening globally and how it fits into the country, our economy?
Thank you again once again, and good morning, Nigerians. As you rightly put it, and I'm happy to hear that no boat is rocked, and the decisions of the MPC are in consonance with the expectation of economic agents. In terms of outlook or forward guidance, you have mentioned the big elephant in the room, which has to do with the conflict in the Middle East, especially the resumption of hostilities. That poses a significant risk to the outlook, and all that is happening in terms of forward guidance revolve around the outcome of the tension in the Middle East. However, the outlook is positive in Nigeria, because Nigeria has some relative advantage over some other economies. If you observe carefully, since the outbreak of the war on February 28, there have been some significant challenges in some economies. Exchange rate in some economies have depreciated significantly, warranting huge intervention to be able to bring some level of stability. In some other countries, inflation had flared up higher in terms of rate, in terms of momentum of increase than we have seen in Nigeria. So in essence, what I'm trying to say is that the prior reforms that were undertaken in Nigeria helped a long way to shield the economy from the adverse impact of the war. And we believe that those reforms, as they continue to be implemented, will help to reduce the impact of the war on the economy. You can see the exchange rate, it has been very stable to a large extent. The pressure has been contained, and we've been having liquidity in the exchange rate window, the exchange rate market, showing again the resilience of the economy. Our currency has been relatively stable, and with inflows coming in, I am sure that we'll be able to weather the storm, irrespective of the resumption of hostilities. The second advantage we have as a country is the Dangote refinery that has kicked in and has been working. Even though a substantial quantum of crude is still being imported, but of course the refinery and the supply that it has provided is also able to shield Nigeria to some extent from the vagaries of the hostilities in the Middle East. So in a nutshell, the outlook is relatively positive, and we are hopeful that in the near term, those hostilities will be resolved, and our inflation will be able to continue on a downward trend.
So driving inflation in Nigeria, a lot of people have argued that it's not, about a demand, it's more about the structure of it. So when we put that side by side with most of the responsibility coming from the fiscal side, because you talk about issues of logistics, infrastructure, insecurity, these are the major threats to Nigeria's inflation and all. But when you put this side by side with the politics is the season is upon us already. The festive season is also upon us in a couple of months. If I heard there's Christmas in July now, people are starting stocking up for July, and of course we know what that can do: higher demand, higher prices. Has the CBN thought about perhaps how we could handle this so it doesn't hurt the real economy so much, but at least we can find a balance amidst these factors?
Thank you. Is part of the considerations of the MPC, and the MPC continue to evaluate the incoming data as relates those factors, particularly the level of liquidity in the banking system that is in tandem with economic activities. So going forward, the MPC is aware of the festive season. Even beyond that, the MPC is aware of election-related activities and spendings that could, of course, threaten stability in prices. All these are taken into account, and the bank is fully prepared. The level of banking system stability, liquidity is assessed on a daily basis, and where there is need for mopping, the appropriate instruments are available. We have the OMO, we have the corridor, the standing deposit facility. All the instruments are there. So it is not just the use of MPR, the policy rate. There are other complementary instruments that are being used to ensure stability in the banking system, so that it doesn't lead to increase in money supply and, of course, inflationary pressure. The other point that is important is the kick-in of the early harvest. Remember that when you disaggregate headline inflation, one of the stubborn components is food inflation. And as we approach the early harvest season, definitely that is going to help to a sort of reduce the pressure from that level. Again, the level of collaboration between the monetary policy and fiscal authority has also deepened in recent times, and this is even going towards the point of identifying pressure points in terms of supply side constraints, and the fiscal authority is committed and is doing so much to see that those bottlenecks are removed and those pressures are defrayed to be able to bring down inflation.
So, sir, just before we let you go, the CRR, that was also retained, and the real sector say that's really huge, the 45%, especially for commercial banks. I wonder if we can understand more the CRR at that point, and well, there's no meeting until September, so we'll have to wait until then.
Yeah, the CRR. The CRR at 45% is we know that is somehow high, and it's not the decision, it's not the wish of the committee to keep the CRR at that level for a long time. But again, the decision is always driven by data analysis. At the moment, the CRR had remained there as a temporary measure, hoping that will be able to some form of sterilize the huge liquidity in the banking system, and then being able to bring down inflation. And as soon as inflation comes down to a reasonable level, definitely we need to reduce the CRR ratio to give some relief to businesses and even households. We know that businesses need the cash. The other point I want to bring here is that with the recapitalization exercise that has recently been concluded, banks also have additional capital. So in terms of capital adequacy within the banking system, I will assure you that they have enough capital, and that level of competition, we are hopeful after the recapitalization exercise will be able to push credit more to the real sector and stimulate economic activities.
All right, thank you so much, Mr. Victor Obo, Director, Monetary Policy Department at the Central Bank of Nigeria. We appreciate your time.
Thank you. It's my pleasure.
Let's take a break now. When we come back, they call it Mwa Boy. Do you know about it? We'll talk about it today. Please stay with us. Welcome back. Well, let's look at the unemployment rate, especially among the youth in Nigeria, and that takes a mind back to an old school tradition which should be touched up or has been touched up. But first of all, look at Nigeria's employment status. According to the World Bank and the International Labour Organization, youth unemployment, that's for youth between 15 and 24 years, stands at 8.6%. Youth not in employment, education or training stands at 13.7%. overall unemployment rates, of course, there's been a lot of controversy around the unemployment rates given by the NBS, and that's why a lot of people don't talk about it anymore. But overall employment rate, according to World Bank and International Labour Organization, 5%. Combined unemployment and time-related underemployment is 17.3%, and informal employment 92.3%. So the informal employment is what catches our attention, which is why we are reaching out to a professor who says that there's a system that could help us mop up this unemployment data or number that we see. He did his presentation, I believe it was last week, his lecture last week, and that's the professor of management at Nnamdi Azikiwe University in Awka, Anambra State, Professor Chinedu Chukwu joins us virtually from Awka. Prof, good morning. Welcome to the program. Your lecture has become very popular, even though we've heard of the term, long before now. I think there's even a movie that was done from it, but putting it together as a lecture obviously has caught a lot of attention.
Yeah, good morning. Thank you for having me.
So this Nwaboy, obviously it's a tradition mostly practiced by the Igbo people, but I believe it's been pushed up now to be adopted even in schools, in universities.
Yeah, that's why Nnamdi wants to take the lead. This Igbo apprenticeship scheme is a homegrown business model where Nwaboy, which we call the apprentice, live and work with Oga, which we call the master. At the end of the training, at the end of the deposition agreement, money will be given to the Nwaboy, and then or they will be given goods in exchange for the labor. And this training is done at no cost. That is the most interesting part of it. At no cost, zero cost. The cost of training is zero. So, and this Igbo scheme has been neglected over a very long period of time. That's why in my inaugural lecture, we find ways to formalize and then modelize the Igbo scheme.
How do we formalize it and adopt it into our private education system, so that it's not just about that people do not go to school and they just stay with people? How do we package it so that it fits into what we have in our education system?
Okay, thank you. The Anambra State government has already taken the lead by enacting Igbo law in 2025. Although there are still some flaws and limitations, which our research at Nnamdi Azikiwe University have done justice to that. First one, we have to reduce the tenor, the contractual agreement, which is normally now, which is 5 to 7 years. We find a way to reduce it. Then another one is being dominated by MEPs. That's why we introduce a concept we call Iwagil, where our women will also be involved in this Igbo apprenticeship. And we introduce a model we call apprenticeship, blend of apprenticeship and entrepreneurship, where, this scheme is associated with low esteem. We want to discard that low esteem. That's why we introduce the model apprenticeship, which we call Nkwado Okaranya. What does that mean? Preparing for greatness. So we need to discard that low esteem. And we also formulated the model where this scheme will run concurrently with formal education. We have to structure it in a way where it should run concurrently with formal education. At the end of the program or the scheme, these apprentices will be certified, giving certificates, short-term certificates certificate on the skills or the traits they have acquired or they have learned. And then we also find a way of introducing technology to it and focusing on high demand sector like the ICT, artificial intelligence, all these things. And we also need to involve the financial institutions. That's the proposal we are currently writing. We want the capital market players to be involved in this scheme. Find a way where this scheme has been funded from the capital market through crowdfunding or venture capital. And the other financial institutions should also be involved because the burden lies on only the master. Where the master takes the burden. And at the end of the day, what about at the end of the trading? The master maybe has a problem on the way. What happens to the fate of human boy? That's why government institutions need to be involved. The government need to be, and calling on the SMETA and calling on the SED, other government institutions, Ministry of Youth, they should come and partner with our University. Was want to establish apprenticeship pretty much more in our university, where these trainings will go. And remember, this scheme is the world's largest incubator of SMEs. So it can reduce unemployment in Nigeria by 70%. But we need the cooperation of the government and other government financial institutions and other stakeholders to make this happen.
All right, Prof, you said it's already been adopted and there's a law for it in Anambra State. Have they started practicing it? Could you give us an idea of how it's working if they have started practicing it?
Okay, the law was enacted in 2025, but the government has not, they established Anambra State Employee Commission, Apprenticeship Commission. That's a commission that will handle that. It is not yet functional. And in that law, the rights of human boy is that are clearly stated there. The rights of the master are clearly stated there. Because there are always disputes arising from this contractual agreement. There are laws are provided to settle those disputes that may arise from this contractual agreement. So the law is there. Please, we are calling on Anambra State government to quickly activate these steps. But we can't wait again because the unemployment, you have unemployment in Nigeria. And the SMEs, remember, SMEs contribute from 10 to 50% to our national GDP. So when this scheme must become functional, so we have refined the model. The model we did a lot of research. One of the greatest research ever done in the world, and Harvard Business School recognizing that. So we need, I don't know where government, we need to start.
All right, Prof. All right, Prof. And that's one of the reasons we're having this conversation on Business Morning, so more people would know about it and perhaps buy into the idea. But Prof, thank you so much, and we hope you will continue pushing the message across beyond Anambra State, to other parts of Nigeria. Professor of Management at Nnamdi Azikiwe University, Professor Chinedu Oyuzugbe, thank you so much for your time.
Thank you. Thank you, and I hope you will take the lead. Invite me on so that we spread the gospel. Thank you very much.
All right, Prof. You're welcome. Well, we're still staying on dealing with unemployment in Nigeria, especially focusing on the youth. There's another scheme or program called Training to Jobs Program. That's supposed to be a give hands-on training and then provide jobs. And we have the founder and chief executive officer of Ethical Resolve CC. He's also the founder and chief executive officer of Money in Minutes Finance Company Limited. To tell us more about this, if it's different from the Nwaboy system we just talked about, Mr. George Badejo Adebenga. Mr. Adebenga, good morning. Welcome to the program. I know you know about the Nwaboy system.
Yes, I do. Thank you. Thank you for having me back.
Let me just get your thoughts on it before we move to the Training to Jobs program.
Yeah, I think it's a great initiative, and I like that it's taking back to a particular model that's already worked within the Igbo culture, if you like. So I think it is very, very important that you think about exactly how things, unemployment solutions can actually work in Nigeria, right? So it's, I think it's a great initiative, and I commend Goff for all the work you're doing in that regard.
All right, so this Training to Jobs program, help us to understand it. What's that? How does it work?
Yeah, so firstly, it is important to understand that this is something we already do within a BPO organization in Nigeria for over 4 years, and what that simply means is that we go to the UK markets, to the US market, identify companies that are struggling to recruit but will outsource. And remember, most of all the big organizations globally already outsource. I think it's around about 70% consider outsourcing part of their work. So we get them to first decide, would you outsource to a country like Nigeria? And importantly, which particular role would you outsource? And what we then do is we then go to Nigeria, train people with transferable skills or already have the skills to be able to participate and serve those particular markets. What we're now doing, and I think it's commendable of the federal government, is working alongside IDIS is to scale what we currently do today. At the moment, I think the BPO sector in Nigeria has circa 16,000 people in employment, both locally and serving international markets. And what PwC is saying is that this could actually increase to 200,000. That is taking us to around about $3.8 billion industry per year. So it's a great opportunity, and we already played a part in it, and the idea with government is to scale it. And we're targeting 15,000 people to start with. We're going to identify the right kind of skills we want to upskill them on. But importantly, I think is worth noting that we're taking a different approach this time around. So rather than saying we're just going to train people for the sake of training, I think we've done a lot of that over the years, and it's never really worked. So we're going to all those organizations globally to kind of reach agreement with them, understand what the gap is, establish some kind of an agreement that if we can train certain people to meet your criteria, you would consider employing them. And that is ultimately what this program is about.
Yeah, so what roles, what requirements do these youth need to have before they can get trained, and what kind of jobs are actually available?
Yeah, so there are three different types of roles, the way we've categorized it. We're going to try to do as many university graduates, because that's the way we've kind of focused on making a difference, because there are a lot of university graduates in this country that are not employed at the moment. So we want to target that big workforce where they've already got a base in terms of qualification, but they've not been able to secure jobs, right? So it's going to be broken into three categories. There's an entry category where we're looking at people that just can participate in customer service, can do virtual assistants, that can do AI annotation, and all those kind of stuff. And I think AI is also key to mention. We're very particular about going for roles where AI is not going to erase that role in the next 1 year or 2 years. As a matter of fact, we're thinking about roles that perhaps AI is actually going to create, and position our people to be able to take advantage of that. And then there is the mid-level of those roles as well. So we're talking about bookkeeping, accountants, and stuff like that. We're talking about IT, help desk, a bit more training, social media management, and those kind of roles. And I think on the specialist side, you're really looking at software, web design, and we've seen what Andela has done in that regard. And Nigeria can actually lead the industry. We do have more in abundance of talent, but the key here is how can we ensure they're ready for international service, and that is ultimately our focus.
But what's the assurance? Because obviously there are other countries who have seen this opportunity. So there's competition out there. So you don't just give the youth this training with a high hope, and then at the end of the day, their hope is dashed.
Yeah, very, very good question. It's very, very key because, as you well know, you can always train as many people as possible. Securing jobs is a different ballgame. So we're partnering with some very, very successful people in the field of actually preparing people for work, right? So one, it's making sure first that the job is available. So it's demand-led. So we want to make sure we have enough employers, potential employers that are part of this program. That is one. Number two is then ensuring that we know exactly how we can make them employable. It's not just about certification, right? There's more to it. Like Dr. Akin, one of our key experts in this program, has thought about different ways, and is already doing it, where it teaches you how to even relate on LinkedIn, how to connect with people already in the industry on LinkedIn, how to get mentors on LinkedIn, to be able then to secure your opportunity for a job. So it's not the standard just send your CV or get an interview. It's how can you present yourself, how can you sell whatever you've actually got. So I think it's a big challenge for us, but we're very intentional about it. We're not taking any chances. We're thinking more about, before any curriculum is created, where is the job, right? And importantly, how do we ensure that when we train these folks, how can they definitely secure a placement with those kind of organizations?
And
it's all about being intentional.
All right, and you're targeting the graduates first. I hope they don't have to pay through their noses to be part of it.
This is where federal government comes in. This is what IDIS is now doing to a large scale. So they are actually going to be funding the training, going to be free of charge. When all the details is available, we will make this open to the general public. I'll probably come back on the program to come talk about the links to actually apply. We are focused on the Southwest, but there are other players focusing on other regions within Nigeria. So it's a global thing, and it is government trying to ensure that with the growth in population, especially amongst the youths, there must be an intentional solution to ensure these people remain employed to contribute to the economy.
All right, so I will certainly wait for you for that, especially since it will be free of charge. We have a lot of youths who are looking out for what to do, productive jobs to do. So we would certainly be waiting for you when you're ready for that. Founder and Chief Executive Officer of Ethical Resolve CC and MIM Finance Company Limited, Mr. George Badijo Adegbenga. Thank you for your time.
Thank you for having me.
Just before we go to the global news segment, I remember the story we talked about the possibility of increasing pension contribution, and of course we saw the private sector reacting against it. They say that's going to hurt their business. Well, we have a reaction also from the Director General of PENCOM, that's the National Pension Commission, and that's Ms. Oluwana. She says that for the avoidance, and this is on our X handle, for the avoidance of doubt, my comments were in relation to employer pension contributions and not employee contributions. That's clarity, and she also says that engagement with organized labor, employer association, and other key stakeholders are still ongoing. No final decision has been taken. Nigerians should be rest assured that PENCOM will not introduce any reform that makes life harder for ordinary Nigerians. Any eventual reform will be consultative, evidence-based, and carefully designed to strengthen retirement security while balancing the interests of workers who are top priority, and employers as well as the wider economy. So that's the initial reaction from the Director General of PENCOM to all of that. I believe there will be more in the coming days, and even here in Business Morning we'll be discussing this issue on Monday, God's grace. But now let's head straight to the global news segment. Going global now, we start from the United States. The Trump administration has said that it's imposing tariffs on 60 of the country's top trading partners, covering nearly all of U.S. imports, for failing to tackle the making of goods by forced labor. I believe Nigeria has also been named in this. The U.S. Trade Representative said that it had initiated investigations in March into the 60 economies at the directive of President Donald Trump related to their failure to impose and effectively enforce a prohibition on the importation of goods produced with forced labor. According to a separate fact sheet published by the agency, U.S. trading partners that have made commitment to enforce forced labor import prohibitions will be hit with 10% tariffs, while those who have not adopted such prohibitions will have a 12.5% tariff rate, and countries that will be hit with a 10% rate include Canada, Mexico, the UK, and India. Trust President Trump, he always knows how to start one trouble or the other. Well, Iran has rejected a U.S.-backed ceasefire proposal delivered by Iraqi Prime Minister Ali al-Zaida, dismissing a temporary truce as President Donald Trump stepped up threats to target the country's critical infrastructure. This is according to the New York Times, citing Iranian and Iraqi officials. The latest diplomatic setback comes as the conflict between Washington and Tehran has intensified sharply in recent weeks. On Thursday, President Donald Trump vowed major military punishment against Iran and its Houthi allies after the Yemeni group attacked 2 Saudi oil tankers in the Red Sea, opening a second major shipping front alongside the Straits of Hormuz. The escalating threats have fueled fears of broader disruptions to global energy supplies, sending Brent above $100. We saw it taper a bit this morning for the first time since May, after it surged 6%. Tehran said that it was unwilling to accept a temporary deal that has left unresolved the issue of control over the Strait of Hormuz, which is one of the world's most important oil shipping checkpoints. And the proposal was said to be the only ceasefire offer currently under consideration. From the US, the UK retail sales there increased 1% in June. This according to data released by the Office of the National Statistics. The rise follows a 1.2% increase in May 2026 and exceeding what economists had expected, which was a 0.3% decline. The Statistics Office said that retailers attributed the June growth to sales promotions and warm weather, which boosted demand for outdoor products, fans, air conditioning units, and sports merchandise. The NET office reported that June 2026 was the second warmest June on record for the second quarter of 2026. Retail sales volumes rose 0.6% compared with the first quarter. The quarterly increase represents a 2.8% rise compared with the 3 months ending in June 2025. Non-store retailers, which include online sellers and market stalls, showed strong performance in May and June. Sales volumes in this category increased as consumers purchased outdoor products, which include fans, clothing, and sports merchandise. Clothing stores recorded a 1.9% monthly rise in June, marking their largest monthly increase in September 2025. None of this has been affirmed by the Statistics Office, and they say that retailers are reporting that sales promotions and warm weather drove growth. Non-food stores, they also posted 1.2% increase in the second quarter. And Volkswagen Group has cut its 2026 sales revenue forecast to a range of 3% decline to flat compared with previous year, and that's down from its prior forecast of 3% growth. The German car maker cited the macroeconomic environment, uncertainty around international trade restrictions, and geopolitical tensions, intensifying competition, volatile commodity, energy, and foreign exchange markets, and changing emissions-related regulatory requirements as key challenges to its outlook. The company kept its operating return on sales guidance unchanged at 4% to 5.5%, and Volkswagen's operating result fell 11.6% to 5.93 billion euro in the first half of 2026, and that's down from 6.7 billion euro a year earlier. And near France, the private sector contraction eased in July, with services output slowing only marginally, although inflation, borrowing costs, and geopolitics, they all remain concerns as tensions in the Middle East flare up again. This according to a business survey that was shared earlier today. The S&P Global Flash France Composite Output Index went up 49.6% from 47.2% in June. That's a preliminary survey. Of course, we know that 50 marks growth from contraction. A poll earlier for the July Flash Composite stood at 47.8%. We move to Asia now. Japanese consumer price index inflation grew as expected in June, while core inflation advanced but still remains below the Bank of Japan's annual target. Core CPI inflation, which includes volatile fresh food prices, that rose 1.6% year on year, according to government data. The print is in line with expectations and remains below the BOJ's 2% annual target. A core reading that excludes both fresh food and energy prices, that fell 1.7% in June from 1.8% in the prior month. The print is closely watched by BOJ as a gauge for underlying inflation. Headline CPI went up 1.7% year on year from 1.5% in the prior month, and that's the highest CPI reading for the year. Inflation picked up but remains relatively subdued as government subsidies on fuel and utility largely shielding the public from high commodity prices stemming from the Middle East war. Still in Asia, once the world's third largest cocoa producer, Indonesia is seeking to revive cocoa production after years of underinvestment, aging trees, pests. That's left the industry short of beans and increasingly dependent on imports. The country's 11 cocoa processors can now grind more than 750,000 tons of beans a year, but they're operating at only 60% of capacity because local harvests have steadily declined. And this is according to the industry ministry. Reviving domestic supply is a key focus for Indonesia's Cocoa Conference and dinner, which is holding this week. And in India, SBI Funds Management, their shares fell briefly below their offer price just 4 days. That's the largest IPO in India after their trading debut, signaling weak secondary market demand for the nation's largest asset manager. The stock declined as much as 0.9% to 570 rupees today, Friday, versus an initial public offering price of 574 rupees before reversing the losses to trade at 578.60 rupees. And the US-Israeli war on Iran has sparked a Diet Coke shortage in India by squeezing supplies of aluminum cans, triggering an unusual wave of Diet Coke parties in one of the world's largest consumer markets. But now the fizzy drink is getting pricier. Across India, Coca-Cola has hiked prices of Diet Coke, which is sold predominantly in aluminum cans in the country, by more than 10%, and that's because of the ongoing Middle East conflict. This has choked its supply chain. As a result, the company has been forced to procure pricier, larger sized cans from Southeast Asia, and the impact is still being counted at this time, but who would have thought that Diet Coke would be affected by the war? Those are the global stories for this time. that's it on Business Morning. Thank you so much for being a part of this journey. I'll be back at 1:30 to give you updates from the world of business, and then we'll look broader to the continent. That's Business Incorporated. I'll see you there. Bye-bye.